For many of us, the stock market is just for the wealthy elite or for people who have a ton of money to invest. But let me tell you, that couldn't be further from the truth. Shares, also known as stocks, are a great way for the average person to make money and potentially get rich. And the best part, you don't need a ton of money to start investing. With just a little bit of cash, you can start building your portfolio and watch your money grow. So, are you ready to learn how to make money with shares? Are you ready to potentially get rich? Hello everyone and welcome to our channel Crypto Ninja, where we talk about all things money making and investing. Today, we're going to be talking about stocks and how you can make money with them. So, if you're curious to know how, then keep watching. What are stocks and how they are traded? Now, I know that some of you might be thinking, stocks, that sounds boring, but trust me, once you understand the basics, you'll realize that there's a whole world of excitement and potential for making money out there. So, let's start with the basics. A stock is basically a small piece of ownership in a company. When you buy a stock, you're buying a little piece of that company, and you become a shareholder. And just like when you own a piece of property, the value of your stock can go up or down depending on a lot of different factors. Now, here's where it gets interesting. When you own a stock, you're also entitled to certain rights, like the right to vote on important company decisions and the right to receive a portion of the company's profits, called dividends. So now that we know what stocks are, let's talk about how they are traded. This is where it gets a little bit more complicated, but don't worry, I'll break it down for you. There are three main differences when it comes to how stocks are traded. The first difference is where the stocks are traded. Some stocks are traded on stock exchanges, like the New York Stock Exchange or the Nasdaq. These are big, organized markets where buyers and sellers come together to trade stocks. The second difference is how the stocks are traded. Some stocks are traded through a traditional broker, like a stockbroker or a financial advisor. This means you're working with a professional who can help you make informed decisions about which stocks to buy and when to buy them. The third difference is the time frame of the trade. Some stocks are traded on a short-term basis, meaning you buy and sell them quickly, often within a matter of days or even hours. Other stocks are traded on a long-term basis, meaning you hold on to them for a longer period of time, sometimes for years. Well, all of this might seem a little bit overwhelming at first, but don't worry, you don't have to become an expert overnight. Before we move further with today's video, guys, support this channel by smashing the like buttons and hit the bell icon to stay in the loop for all the upcoming videos. Investments. Now that we know what shares are, let's see the possible investment options and how shares can be a part of your financial journey. But before that, don't forget to like this video and subscribe to our channel. Also hit the bell icon so that you don't miss out on any new videos. Coming back to our topic, there are two main types of shares: short-term and long-term. Short-term shares are typically bought and sold within a year, while long-term shares are held for longer than a year. Short-term shares are usually riskier, but they can also give you a higher return on investment. On the other hand, long-term shares are generally considered safer, but they might not give you as much of a return as short-term shares. Also, short-term shares are perfect for people who like to take risks and are willing to put in a lot of time and research. These are the types of shares that you'll see people talking about on financial news shows and in trading chat rooms. They're usually bought and sold quickly and can be affected by a lot of different factors, like news or rumors about a company. But if you're willing to put in the time and effort, you can make a lot of money with short-term shares. But long-term shares, on the other hand, are perfect for people who want to invest in a company for the long haul. These are the types of shares that you'll see people talking about in retirement and investment planning books. They're usually bought and held for a long time and can be affected by a lot of different factors, like the company's overall performance and the economy. But if you're willing to be patient and hold onto your shares, you can make a lot of money with long-term shares. So which option is right for you? Well, it really depends on your goals and risk tolerance. If you're looking to save up for a short-term goal like a vacation or a down payment on a house, short-term investments might be the way to go. But if you're looking to build wealth over time and have a long-term horizon, long-term investments might be a better fit. Don't be afraid to have some fun with your investments. We're not talking about gambling your life savings away. But why not try investing in a company you believe in or a hobby you're passionate about? It can make the process a lot more enjoyable. And also, it's important to remember that there is always risk involved with any type of investment. Ways to make money with little capital. I know that the stock market can seem like a daunting and confusing place, but don't let that scare you off. Yes, there's always a level of risk involved when it comes to investing in shares, but with a little bit of research and knowledge, you can definitely make some serious money. But for that, you need to know ways that can help you can make money with little capital when it comes to shares. First up, we have dividend investing. This is where you invest in a company that pays out dividends to its shareholders. These dividends are usually paid out on a quarterly basis and can be a great way to earn some passive income. Next, we have day trading. Now, this is definitely not for the faint of heart, but if you're willing to put in the time and effort to learn the ins and outs of the stock market, it can be a great way to make money. The key here is to buy low and sell high and to always keep an eye on the market trends. Another option is to invest in index funds. These are funds that track a specific market index, like the S&P 500. They're a great way to diversify your portfolio and earn a steady return on your investment. Finally, we have options trading. This is where you buy options on a stock, which gives you the right to buy or sell the stock at a certain price. This can be a great way to make money, but it's important to remember that it's also a high-risk strategy. Risk of trading stocks. With all the investment options available, there are some risks of trading stocks you need to be aware of. Trading stocks can be a great way to grow your wealth, but it's not without its risks. The stock market is volatile and can change in an instant. But don't worry, there are ways to minimize your risks and make the most of your investments. One of the biggest risks is market volatility. The stock market can be unpredictable, and shares can go up or down in value quickly. To minimize this risk, it's important to diversify your portfolio. This means investing in different companies and industries, so if one stock takes a hit, you're not losing all your money. It's also important to have a long-term investment plan and not panic when the market dips. Another risk is investing in a company that doesn't perform well. But to minimize this risk, it's important to research the company before investing. Look at their financials, their management team, and their competitors. A company with a solid track record and a clear strategy for growth is a safer bet than a company with a lot of red flags. Another tip: don't invest more than you can afford to lose. It's important to remember that the stock market is never a sure thing. Always invest with money you can afford to lose, and never invest more than you can afford. So, what returns can you expect with shares? Well, it depends on the company and the market conditions. It's not a one-size-fits-all answer, but historically, shares have had an average return of around 10%. But of course, past performance is not indicative of future results. Now, let's say you invest $1,000 into shares for 10 years. With an average return of 10%, that investment would grow to around $3,300. Not too shabby, right? But let's say you're feeling a little more adventurous and you want to try to beat that 10% average return. Well, with the right investments, it's definitely possible. For example, let's say you invest $1,000 into a company like Amazon when they first went public. That $1,000 investment would now be worth over $100,000. Best way to start with minimal risk. Now, for those of you who are new to investing, you might be wondering what the best way to start is with minimal risk. One way is to invest in index funds. These are funds that track a market index, like the S&P 500. This way, you're investing in a diversified portfolio of companies, and you're not putting all your eggs in one basket. Another way is to start with a small amount of money and gradually increase your investment as you become more comfortable with the process. When it comes to exchanges, it's important to make sure you're using a reputable and safe one. Some good options include the NASDAQ, NYSE, and the London Stock Exchange. But how do you know if an exchange is reputable and safe? One way to check is to see if it's regulated by a government agency. This means that the exchange has to follow certain rules and standards to protect investors. Another thing to consider is to take a look at the reputation of the exchange. You can look at customer reviews and also check if the exchange has been in the news for any negative reasons such as hacking, insider trading, or any other legal issues. Another thing you can do is to look into the stockbrokers that are associated with the exchange, as they will have to be licensed and registered with regulatory bodies. Keep in mind that even when you follow these guidelines, investing in shares always carries some level of risk. But with a little bit of knowledge and a lot of patience, you can make smart investments that will pay off in the long run. So, can you still get rich with shares? Absolutely. It's not a get-rich-quick scheme. But with the right approach, investing in shares can be a great way to grow your wealth over time. So that's it for today's video, folks. I hope you found this information helpful and a little bit fun. If you have any questions, feel free to leave them in the comments below, and I'll be happy to answer them for you. And as always, don't forget to like and subscribe for more great content like this. Thanks for watching, and I'll see you in the next video.